All right. Good morning, ladies and gentlemen. Good morning, ladies and gentlemen. Welcome to today's class. My name is Julius. If you can see my screen, give me a 1 in the chat. You can see my screen, give me a 1 in the chat. Let me know that you can see my screen. Good morning, ladies and gentlemen. Good morning, ladies and gentlemen. If you can see my screen, give me a 1 in the chat. If you can see my screen, give me a 1 in the chat. Drop 1 in the chat if you can see my screen, and welcome to lesson number 1 of 2024 of technical analysis. My name is Julius, and today I'll be building a solid foundation to our lessons. Last week, we dived into the market in a different manner and a different perspective, where we were trying to build a basic solid understanding of the general performance of the crypto market space. But today, on all the different ways that anyone could maneuver into the market, we are going to put our focus on technical analysis. We are going to put our focus on technical analysis. And that could be the main reason why we are here. Today, ladies and gentlemen, we want to start with the movement of the market. How does the market move? Because if you understand how the market moves, it is very easy for you to know that now the market has formed a downward trend. Now the market has formed an uptrend. Now the market is moving in a sideways. And the way you trade when the market is on a downtrend is not the same way you trade when the market is on an uptrend. It's not the same way you analyze the market when the market is on a sideways. And so it is critically important for anyone who is deciding to make a decision to basically understand the downtrend, the uptrend, and the sideways. And so this basically takes me to the second slide for today. To just go on now, and let us start with a downward trend. What is a downward trend? What is a downward trend? A downward trend is formed when price action starts to fall progressively over a period of time. It is a result of massive continued selling. As in the near future, we are going to look at candlesticks. Massive continued selling or high selling pressure by traders. When traders take control of the market, when traders decide to rule the game of the day by deciding to sell their crypto assets, then, ladies and gentlemen, you will notice that there will be a progressive downward movement of the market. And in that capacity, And in that capacity, we will say that the market is on a downward movement. And in that capacity, we will say that the market is on a downward movement. We shall look at what I'm trying to talk about here. That as this market is moving down, it will not go down direct like this. No, as it will be moving down, it will move down, move up a little bit, 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 move down, move up a little bit. But when you draw a line on these points, you see now it forms a normal V and an inverted V. So as a trader wants to get in when the market forms a normal V and gets out when the market forms an inverted V. Okay, but what is most important, when you draw a line on these points of the inverted V, you can see that the market continuously has been going down, and you will describe this type of trading or this type of market movement to be a downward movement. Let us try to visit the market. I'll stop sharing my screen a little bit. And let us now go to the market. Let us now visit the market, and let us get into TradingView itself. Network is misbehaving. Just a minute. Okay, just a minute. Just a minute. Just a minute. Okay. I want to. Okay. I know my network may not be good, but I'm trying my level best to get things normal. I'm trying my level best to make sure that things get normal. All right. So I'm gonna share my screen once again. I'm going to share my screen once again. If you can still hear me, give me one in the chat. If you can still hear me, could you give me a one in the chat? If you can still hear me, as I try my level best to get my network normal. Give me a 1 in the chat. Thank you so much for following. We are moving a little bit slow, but we are making sure that we are very intentional with what we are discussing this morning. So now let me go to the market, to the charts. Let me go to the charts now, so that maybe you could get the perception or the perspective of what I'm trying to talk about, the perspective of the downward movement of the market. And so I'll share my screen. If you can see my screen, give me a 2 in the chat. If you can see my screen, give me a 2 in the chat. If you can see my screen, give me a 2 in the chat. Thank you. All right, and this is TradingView. I know I haven't introduced TradingView to you guys, but after doing this subject, we are going to have the introduction to this application. But before the introduction is given to you, just allow me to share with you this perspective of the market. But I believe that you will be getting the introduction to this aspect that I'm talking about. From our previous training of the downward movement of the market, I have been trying to say that progressively you can see that maybe the market was moving from here, then it came up, down, a little up here, came down here, rose up here, came down here, rose up here. I don't want to use so many tools now, but let me clear this. It is not clear.
Okay. Good morning, ladies and gentlemen. I see that Leader Julius is not in the house. I came in a bit late. I think he's trying to connect, but because the house is full, probably is failing to come back. I'm not sure what he was intending to share this morning, but I think he's going to come back. Let's just be patient. I don't want to start something that was not supposed to be taught today. So let me just try and check. Let me try and check with him. Okay, he's back. All right. Okay.
Okay, thank you so much, Coach Mopiwa. I think the challenge is with the capacity. Once you move out, you take note, you might not return. But if you don't return, you need to just go back to and use the other aspect of use the aspect of you use the other side of what? Use the other side of use the other side of the YouTube. Okay. So what I was trying to look at, what I was trying to look at is you having a better understanding of the downward trend. Okay, when you draw a line, which I'm not going to draw because you have not yet got a proper introduction. If you draw a straight line, above these highs, you'll discover that the market has been forming a trend that although it has been going down, it has been not going down in a straight line. It moves down, it moves up, moves down, moves up, moves down, moves up, moves down, moves up, moves down, moves up. And so this movement that we are trying to describe, the movement of the market, this movement of the market, when it moves up, then it moves down. It moves up, it moves down. It moves up, it moves down. It moves up, it moves down, is what I'm trying to talk about this morning. That's what we call a downward trend. And so, before we talk about now those points where the market moves down is what we call the lower lows of the market. And those points where the market moves up is what we call the lower highs of the market. So when the market forms lower lows and lower highs, we shall say that this market is on a downward trend. But before it forms lower highs and lower highs, it comes from a highest point. And that highest point in the crypto market space, we call it a higher high. A higher high means it was the highest point in the market. When I take you back to that picture again, if you are following, give me one in the chat. If I take you to that picture again, if I take you back to that picture a little bit again of trading view, can we all see that the market started from this point up there? Now, this point is what we call the highest point. And then it moved down. Am I still in? Give me one in the chat if you can still hear me. It was like I moved out. Am I still in? The one in the chat? The one in the chat? Okay, good. So this is the higher high. Then it came down tool is this? Looking for something that could help me much more easier. But since we have not done the introduction. Okay, so you see this is the higher high. Now it moved from that point. It moved from that point. It moved from that point. Then it came down here. Then it came down here. Then it came up here. Then it came down, came up a little bit around that point. Not perfect because I'm just using my fingers, no tool. Simply because we haven't introduced any tools to you. So when you draw a straight line from this high point, this one, to these 2 points, these ones on high, you'll find that this is the higher high and this is the lower high, while these ones become the lower lows. So we shall say the market is forming lower lows and lower highs, and this market is on a downward trend. Give me a 2 in the chart if that is clear. So without me doing anything on the market, when I see here, what do you see here? Let me note it. What do you see in this area here? Give me an answer in the chat. What do you see in this area that I've circled? The circle may not be complete. What do you see? You see that the market was coming from a highest point, which is a higher high, and it was forming a dynamic movement of up, come down, come up, come down. And we could say simple, in this small area, the market is on a what? Answer in the chat. The market on a what? Is on a downtrend. Thank you. Are we learning? Is it hard? Is it simple? 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 Okay. Okay, so just a minute. Let me take you a sample space of the coin we are trading for today, because I believe you have already received your signal of Stellar. The coin we are trading today is called Stellar. And Stellar has what we call its ticker. Now, you see, guys, learning in crypto doesn't. So this is what we call a ticker. And when you hear me talking about a ticker, I'm talking about an abbreviation of the full name of a cryptocurrency. So when I said the ticker name of Stellar is XLM, that's what I mean. The ticker name. Give me a 3 in the chat if you have learned that too. The ticker name. Give me a 3 in the chat if you have learned that too. The ticker name. So when you hear me saying the ticker name of Bitcoin is BTC, that's what I mean. I mean the abbreviation of this cryptocurrency. All right. So the ticker name is of the coin we are trading is XLM. And so I'll need to get this off. Okay, yeah. TradingView is refusing to serve two masters at a go. So I may not be in position to open this unless, let me do it this way. I stop sharing my screen and get the chart to open. Then I share my screen again. Okay. All right, then I come back here and then I share my screen again. All right, okay. If you can now see my screen, another one in the chat. Okay, now we all can see here, we all can see this is XLM. Coach Mopua will be doing these statistics of the time frames very, very soon. We all can see XLM. Okay, now XLM is gonna be a perfect example on my next chart. So let me just put it down, guys, and just get you into this once again. Brianna, not now. We agreed in the morning, I'm teaching, so you some minutes, okay? So, all right, so what you see, ladies and gentlemen, is the downward trend. That when you draw a straight line above those points, you can see that the market is generally down. I'll just run to the next one because of time. Okay, now the next one is the uptrend. Okay, it is formed when price action increases gradually but progressively over a speed of time due to massive buying pressure. So like we saw on a downward trend, we are going to see that on an upward trend, you see that the market is moving up, then moves down, moves up, moves down, moves up, moves down, moves up, moves down. And as a trader, you would maybe want to make your entry at these points, make your exit at the previous higher high. Make your entry at this point, make your exit at the previous highest point. Make your entry at this point, make your exit at the previous highest point. So let's go to the chart, and so we look at an uptrend. Let's go to the chart. Let's go to the chart. And then we look at, but before we go to the chart, to look at an uptrend, we can see that when you draw a straight line below those candles, you could see that the market is above, the candles are forming above your line. And we could say that is an uptrend. Let me just go to the next so that I could save time, then I go to the chart at once. Okay, the next is what we call a ranging market. The next is what we call a ranging market. And this ranging market, ladies and gentlemen, is a mixture of the highest points, the lowest points, the lower highs, the lower lows. It's a mixture. You find that the market is into one area and it is not changing. It's not showing you whether it is moving up. It is not showing you whether it is moving down. And in the language of cryptocurrency trading, we could say the market is ranging, or the market is moving sideways. It is not taking an upway. It is not taking a downway. It is moving in a sideway. It is moving in a sideway. And so let us look at these three aspects. Let us look at these three aspects on TradingView. Okay? So I'm not drawing anything, but I just want to show you so that when we start talking, you understand. Can we all see in 1 hour here that the market is not forming a clear picture? When we draw a straight line above and a straight line below, can we see that the market is not forming a clear picture? It is not going up. It's not showing us an up movement. It's not showing us a down movement. Give me one in the chat if you can see that with your naked eyes in 1 hour here on the XLM, one of the cryptocurrencies that we are trading today. Give me one. You can see it. The market is not forming an uptrend, but the market is moving from here, come up, come down. We expect it now to move up. It is moving into what we call a sideway. You cannot say that this market is on a downtrend. You cannot say that this coin is on an uptrend. Give me one in the chat. Although in between, yes, there could be some up, down movement, but generally, all of us can see that this market is on a sideways. Give me is this hard or it is simple? If you're a first timer to be here, is this hard? Is this hard or it is simple? Is it hard or it is simple? Now let's look at an uptrend. Let's look at XLM in the 4-hour time frame and see. Can we also see in the 4-hour time frame that this coin is not clear? Is this a downtrend or it's an uptrend? Answers in the chat. Is this a downtrend or it's an uptrend? Answers in the chat. What do you see here, according to what we have learned so far? Is this an uptrend or it's a downtrend? Answer. Is this an uptrend or it's a downtrend? What do you see here? According to what we have studied so far, what do you see here? An uptrend. Thank you, Austin. It's a ranging market. It's a ranging market. Thank you, Austin. It's a ranging market. It's not a downtrend. It's not an uptrend. It is a look clearly, guys. What do you see in this area? It's a small area. What do you see here? It's not a downtrend. It's not an uptrend. It's a ranging market. And we shall see that now it's a ranging market. This ranging market is forming what we could call a double bottom here. We shall look at these things a little bit more. You see now, the power of a ranging market is so superb. Can we see this market before coming down? This market before coming down in this specific area, if you could draw a line here and a line here, can you see that this market was forming what we could call a ranging before it moved down? We are going to be looking at this later. You see the market moved from this point, it came to this point, came up, came down, came up, came down, then okay. Who can see that? Give me a 4 in the chat if you can see. Give me a 4 in the chat if you can see. The market moved from a downward movement, came up, came down, come up, come down, then psst. Now what do we expect? After this movement, it is doing the same thing that it did here. This is what makes trading beautiful. What's going to happen here, ladies and gentlemen, in the 4-hour time frame is something superb. Okay. What is going to happen here? It is something superb. Why? Let me show you. I'm just building a foundation, guys. I'll draw some funny lines. The market moved from below, did this, moved down. It is doing the same thing here. Well, it came down here, moved up, did this. Now, ladies and gentlemen. Guys, are you seeing what happened here? And then I will not describe because I don't want to cause confusion. Is repeating here. Then we are going to see para. This you'll understand with the time. Give me a 5 in the chat if you can see that. I will explain, but not now, right? I will explain because this is our first lesson of 2024, but it gives you what happens in the market. Now let's look at an uptrend. How does an uptrend look like? If someone talks about an uptrend, if someone describes what we call an uptrend, I'll pick a cryptocurrency by the names of ARB. ARB is the ticker of a cryptocurrency called Arbitrum. And what is Arbitrum? Arbitrum is a layer 2. Arbitrum is a layer 2 scaling solution of the Ethereum blockchain. Those who have attended our classes, what is a layer 1 and what is a layer 2? Answers in the chat. If you started with us this year, what is the difference between a layer 1 and a layer 2? Answers in the chat. Answers in the chat. What is the difference between a layer 1 and a layer 2? I have a few minutes to come to the end of my call. But what is the difference between a layer 1 and a layer 2? We don't want to produce half-baked people in the market space. What is the difference between a layer 1 and a layer 2? No one knows the difference. Then I end the call. I spend most of my time here. What is the difference between a layer 1 and a layer 2? Someone is saying layer 1s are above 10 million. That's wrong. Thank you. Thank you. I've seen a good answer here. A layer 1 is the mother cryptocurrency on their own blockchain. Yet a layer 2 are built on existing blockchain. Thank you so much. Thank you so much. Thank you so much. Thank you so much. An amazing answer. An amazing answer from Muhammad. A layer 1 is the mother cryptocurrency on their own blockchain. Yes, a layer 1 is a mother cryptocurrency on their own blockchain. That is very important. And the layer 2 is built on top of an existing cryptocurrency. And so Arbitrum is a layer 2 scaling solution. It wants to make Ethereum to be much more faster. As simple as that. Thank you so much, sir. So we are going to look at Arbitrum, a layer 2 Ethereum scaling solution. And we are using the 4-hour time frame. We can also try the 1 day. These are going to be done by Coach Mopiwa very, very soon. Very, very soon. Me, I'm just doing a mere introduction to trading. Can we all see? Can we all see? Can we all see with our naked eyes that if we pick this lowest point and draw a line, this is just, I'm just using my fingers. I may not be so perfect because I don't want to introduce anything. Can we see that if this was the lowest point, the market moves up, moves down, moves up, moves down, moves up, moves down, moves up, moves down? That now, this point where it starts will be the lowest point, the lower low. Then it forms this highest point, which we call the higher high, the highest point in this area. But when it's going down, you see it doesn't come back to this lowest point. So it forms what we call the higher high. Then it forms the higher low. The lowest point from the high, then it forms a higher high. then it forms a higher low, then it forms a higher high, then it forms a higher low, then it forms a higher high. So we shall see, because the market is forming from a lower low and it forms a higher high, then from a higher high, it forms a higher low. From a higher low, it forms a higher high. Then from a higher high, it forms a higher low. From a higher low, it forms a higher high, a highest point. Then from a highest point, it now changes the perspective and forms what we call a lower low. Then from a lower low, it forms a lower high. And from a lower high, it forms a lower low. From it was an uptrend. Here it was an uptrend, but then later it becomes a downward trend. But before it became an uptrend, guys, before it became an uptrend, ladies and gentlemen, listening to me this morning, before it became an uptrend, it was forming a ranging market. Before it became an uptrend, ladies and gentlemen, before it became an uptrend, ladies and gentlemen, it was forming a ranging market. Can we see, ladies and gentlemen? Before it became an uptrend, give me one in the chat if you can see that. It was forming a ranging market, not deciding whether it's an uptrend, not deciding whether it's so. After forming a ranging market, it breaks the ranging market, and now it becomes from here, then it forms a high, a low, a high, a down, 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 down. Then it hits the high, then it retraces. A one in the chat if you are learning. I'm about to come to the end of my sharing. I'm about to come to the end of my sharing. I'm about to come to the end of my sharing, my introduction. Okay, now let's get back to, so far now, I expect someone who's on the call to understand. When we talk about a downtrend, do you understand? When we talk about an uptrend, do you understand? When we talk about a ranging market, do you understand? Now, what makes up the ranging market? What makes up the ranging market? What makes up the uptrend? What makes up the downward trend? We shall see, ladies and gentlemen, that when we talk about technical analysis, we shall see what we call trend lines. We shall see what we call support and resistance. We shall see what we call indicators. Indicators that give you the trend of the market, indicators that show you momentum in the market, indicators that show you volume in the market. We shall go through all these technical analysis, trend lines, support and resistance. Okay, very, very important. So that we could define the movement of the market. But all this that creates the movement of the market, support and resistance, trend lines, happens on what we call a candlestick. And the coming sessions, we are going to see what is a candlestick. The green for the buyers or the red for the sellers. And we're going to understand how a candlestick looks like and what makes different candlesticks to have different shapes. Is it the buying pressure? Is it the selling pressure? And we're going to look at the different characteristics of these different candlestick chart patterns. But all this cannot be done, ladies and gentlemen, without you having a strategic understanding of where all this is done. And with us tomorrow, we shall have Coach Mopiwa to introduce to us a tool where I have done all this stuff. Now that you understand what we call an uptrend, a downtrend, and a ranging market, what makes those patterns to happen is what we call a candlestick. And how can we be able to see them clearly? We are going to have an introduction to a tool called TradingView in our morning session starting tomorrow. Then from TradingView, we shall understand the anatomy of a candle. Then from anatomy of the candle, together we shall go into now candlestick chart patterns. Then from candlestick chart patterns, we shall come back to support and resistance, and then understand the real gist of trading. If you have learned something, give me a 1 in the chat. And I believe this could make our call to the end. And I wish you a perfect morning. Thank you so much for joining us this morning. My name is Julius. And I wish you a nice day, a nice week, a perfect one. And this week, when we get back to the fundamental analysis, we have a lot that is coming this week. Pay close attention. We have a lot that is happening throughout this week. And a lot is really coming throughout this week. And one of the most perfect events that we expect this week is the verification of the verification of the ETFs. Okay, the verification of the ETFs, but also we expect the verification of the ETFs. We have verification of ETFs this week. We believe they could come out and see how things work out. Yes. We believe the verification of this week's, although we have fights from banks, but we believe that the verifications of the ETFs, okay, we believe the verification of the ETFs, and we have Bitcoin ETF interests across US, in Nevada and Washington, the top US states most interested in ETFs. We have Washington more, we have Nevada, we have Colorado, we have Arizona, so we have Florida. You know, ETFs are gonna be so much into the United States of America, but we believe the market could rise. So if ETFs are approved this week, we could have much more money get into the market. It was said, and it's still said by so many speculators, that the Bitcoin ETFs will be approved on the 10th of January. So today is around 8th. We have already explained on the different groups what ETFs are, and I believe everybody knows what ETFs are. We have done the work. We have explained on all our platforms what ETFs are, and we believe everybody has a clear, perfect understanding of what Bitcoin ETFs are. It means these guys are going to come into the market and buy some of the Bitcoins that have remained, or buy some from the exchanges and from that is available, and then be able to take it to their customers. We have over, I think, between 11 to 13 companies, institutions that look at the ETF, which personally I believe it could cause a massive dump in the market. When the BIT ETFs are approved, I see selling pressure. So many people have not taken their profits, will sell off, and so the market could come down. On the other way side, maybe, I'm not sure, but my perception is the market will come down if the ETFs are approved. All the ETFs may not be approved, and then you're gonna see a massive dump in the market. Okay? If the ETFs are not approved, then you're gonna see a massive dump in the market. But as we move so far now, if the ETFs are approved, we could see a massive pump, but then later we see a selling pressure in the market. But all this happened and done, ladies and gentlemen. I also believe that this year will be a good year of the market, and my prediction still remains that where will the bull run come from? The bull run will come from what we call social media platforms that accept people to chat privately without interruption of governments. If it happens and you see so much tweeters on Twitter and X, no freedom of speech, because of the political move that is happening in 2024, I believe, ladies and gentlemen, this could cause the next bull cycle to happen. But although still at the same time, we have the Bitcoin halving, which talks about demand and supply. This could also cause the bull run to happen. But let's see what happens this week on 10th. It's a major event. And see if the Bitcoin ETFs are approved, then massive money could come into the market. My perception is over 70 billion would flash into the market, taking Bitcoin to a minimum rise of over $50,000, all double it to around $84,000 if all happens. But I expect when these Bitcoin ETFs are approved, the market will get a flash of around $70 billion into the market that could cause the market, or the Bitcoin market, or the crypto market space, or the Bitcoin in particular, to get up to $50,000. And then we could see a selling pressure. The selling pressure is coming from the Bitcoin miners who have a lot of Bitcoin, but they have not yet sold, but they have bills to pay. Ladies and gentlemen, these are just dynamics of the market. But generally, this year, we will have an uptrend of the market. Usually, the bull run doesn't come this year specifically. We're already on an uptrend. We could say we're already on a bull run, but the bull run really stinks in so much in 2025, a year after the halving. But we believe this is still an uptrend because we have moved from as below as $15,000 to where we are at around 41, 42, and we are making a consolidation. If you share, just I have 1 or 2 minutes. If I go to my trading view and we look at BTC, if we look at BTC USDT as a major cryptocurrency and choose the Binance Exchange, we all can see, ladies and gentlemen, if we put in 1 day here, we shall not look at lower time frames. We shall see that the market is forming a consolidation. Give me one in the chat if you can say consolidation. The market is forming a consolidation. It's not breaking out this area. It's not breaking out this area, guys. And so 2 things are going to happen if the ETFs, give me one in the chat if you can see the consolidation. The market is forming this, guys. These 2 things might happen when the ETFs, either the market will break this consolidation and move in the upside. And my look is at $50,000. Someone asks why $50,000. Let's just get back to the past, guys. This is not why I'm here, but I'm just giving you then okay, good. Okay, all right. Okay. I don't want to do anything, but just a little bit. I'll draw a horizontal line. This was a high. This high is seated around $48,000. So that is one. But then we have this high here. So these are the 2 points. But the reason why I'm taking 50,000 because institutions want to get in at around those prices. So if then we go back to the current chart of where the market is, we could say that if the market breaks this, okay, we could say that All right, this was just a little fake out here. But if the market is to gonna be very serious, it could move from here, then move from here, then get to 38, 48, retrace a little bit, and then form another upward movement to $50,000, which is around here. Why 50? Because institutional get in usually at these areas. So once they confirm at 48, they could buy more up around $50,000. If at all, go to this high here of 50. This last happened, guys. So many little bit. This last happened here. This was in 2022. So this was in March 2022. And this was in December 2021. Those are the two areas. If these guys buy, I don't expect them to buy up to the all-time high. But if they pump is serious, then we could see if what happened to gold happens to Bitcoin, then we could see Bitcoin form its all-time high, new all-time high, break the previous all-time high of $69,000 because of the power of the ETF. And then we could see Bitcoin sit at over 80 to double the current price and get around to $80,000, ladies and gentlemen. Because these are billions of money, that if more than $70 billion get into the market, ladies and gentlemen, then you could see the market double the price of Bitcoin, get to this price, and that will be the effect of the ETF. If what happened to gold happens to Bitcoin, we expect this to happen this week. Keep your ladders on, and because the Bitcoin ETF, I believe today we could see the market rally a little bit. Why? Because the retailers are believing that maybe the ETF is approved and I have not bought, so the fear of missing out might come into the market, and we could see maybe the market rally a little bit in the upside because of the fear of missing out, and we could see some buyers getting, but not so much. Let's see what happens. Ladies and gentlemen, I wish you a nice trading experience. And the market is not our enemy, nor is it our friend, but we shall make something from the market. God bless you, and we keep moving. Thank you so much. Till tomorrow, Coach Mopiwa will pick it up from there, and then he will start introducing you Trading View. And then later, ladies and gentlemen, we shall get back to, I'll come back to these classes. God bless you, and have an amazing, fantastic week. Thank you, everybody. Nice trading.